Podcasts on UNC-TV.org are made possible through the financial contributions of viewers like you, who invite you to join them in supporting UNC-TV.
Your office, is it a proactive office, is it a reactive office when it comes to seeing this foreclosure bubble happening?
Well, it's probably been a little bit of both. We saw the increase in foreclosures coming. We knew that there were loans that were being made in the subprime market that were not going to be able to be repaid. And so we then worked closely with members of the General Assembly and the Governor's office to put into place a program that would help us do some outreach to borrowers before they went into foreclosure and try to get those folks back on the right track as soon as we could. So we saw it coming a little bit. We did some work on it. Obviously, the foreclosure problem nationwide and in North Carolina has been probably greater than a lot of people estimated. So we still struggle to keep up with the numbers of homeowners that need assistance.
I've seen regulators, economists, they don't like, in theory, the subprime mortgage, but there were many of them out there. What made them so popular, both for mortgage brokers to write up for people and for people who wanted to buy the house and they accepted it?
A lot of people have many different theories as to why subprime mortgages became popular. I think for me, I look at structurally in the financial markets in Wall Street, there was a great appetite among foreign investors for mortgage loans made to U.S. homeowners. And that machine had a big demand, and that then trickled down through the mortgage lenders and mortgage brokers, and it really led to them loosening up their requirements because they needed to make as many of these mortgages as people in China and other investors wanted to buy. And as a result of that, you could make a loan to someone that didn't tell you what their income was. They didn't tell you if they had a job. They didn't tell you if they had any assets. In fact, they had a loan at the time that was called a ninja loan. They are loans called liar loans. So when you have loans that are called ninja and liar, you can imagine that they're not really having someone take a close look at those loans to make sure they're going to be repaid.
What responsibility fell on the mortgage broker or on the bank issuing a mortgage? When it came to those questions, do you have a job? Do you even make enough money to afford this house?
Right. There's a great difference of opinion on that issue as well. In North Carolina, under the law, mortgage brokers have an obligation to represent the borrower and to help the borrower get access to a loan that is reasonably advantageous to that homeowner. Now, I think if you're originating a loan that's going to go into foreclosure, that's not really advantageous to the homeowner. So we think the broker does bear some responsibility. On the other hand, a lot of brokers say, hey, I'm just the last guy in the chain. I'm the guy that I'm just making the loans that the lender's offering, and it's not my job to make sure they're able to be repaid. And so you have two different views of the world, I think, from our office and from North Carolina law. We think the brokers probably had a little bit more responsibility than they actually upheld.
What about the consumer who walked into the office and said, I need a home loan, I want to buy this house?
Yeah. Well, I think certainly everyone in this foreclosure crisis has some part to play. And consumers over the last decade have taken on more debt through mortgage loans than they've obviously been able to repay. So obviously individuals bear some responsibility. At the same time, I think as a regulator, if given the choice between a homeowner and a bank or a mortgage company, I usually expect the person lending the money to know if it's going to be repaid or not. And I place a lot of responsibility on those lenders to have the expertise and sophistication to know whether a loan's going to be repaid or not.
Are the rules set up now the way you need them to be in terms of how you interpret this is the solution?
Sure. I think in North Carolina, we were the first state that passed predatory lending legislation back in 1999. We were one of the first states that required mortgage brokers to get licensed and to be regulated on an individual basis. So we've been adding laws and regulations for more than a decade to try to help insulate North Carolina from some of the bad or abusive lending activities. So I think we had done some work early on, and since then we've made amendments, but those I think have been small, sort of progressive, adding a little bit here and adding a little bit there, but we haven't done a lot at the state level in recent years on additional regulation. Most of the regulatory activities happen at the federal level, and folks in Washington, D.C. have been very busy in writing laws, and that just recently passed into federal legislation on this issue.
In light of the new regulatory processes that are in and protections that are in for consumers, is it okay for society to say that some people don't deserve to own a house because they don't make enough money or they haven't protected their credit good enough?
Well, deserve is not a word I would choose in that. I think that when you have the American dream is for many families is to own their own home, and that by owning your own home you're able to build wealth in your family over time, which can enable you to send your kids to college or handle emergencies when they come up. So I think people who aspire to own a home, I would encourage them to continue to do that. Now, to get a loan to buy a house, you've got to do some work. You've got to have a job, you've got to pay attention to your finances, you've got to save money. And for the foreseeable future, in order to get a loan, you're going to need to prove that you are qualified and that you have been taking care of business as far as your personal finances. So we're not going to go back to the days of easy credit where you can walk in and say, oh, give me a loan and you'll just automatically get one. It's going to be hard for people to get loans, but certainly I think people will continue to aspire to be homeowners, and I think that's a good thing.
I know you have help programs that are out there. How well is that working? How well are people hanging in there with you once they pick up the phone and ask for help?
Sure. Well, I think you've identified in some ways the most difficult piece is getting people to pick up the phone and ask for help. We find that when we're able to reach homeowners and get them involved in working with a housing counselor and working with their mortgage company, most of the time they're actually able to avoid foreclosure and keep their home. Sometimes if they don't have a job and they can't find another job, you may need to leave the house and do something else, but you can still avoid foreclosure, which helps keep your credit rating a little bit better than foreclosures do, and it's a little gives you a little bit more control of the process. In our program over the last 2 years, we've helped over 5,000 homeowners avoid foreclosure by working again with housing counselors and our network of partners across the state. And over 14,000 homeowners have actually met with a counselor and gotten some financial counseling assistance. So
1/3 are making it.
Right.
And almost 2/3 are somewhere in the process, or you can fail even if you get housing counseling,
sure,
right?
Absolutely. And so the 1/3 we know have avoided foreclosure. The other 2/3 are either working toward it or we don't know the answer yet. So, and we've tried to be conservative with our numbers so that we are accurate with what we say we've done.
When you go to counseling for trying to stay in your home and you're asking for a loan modification, are they going to ask you to turn off the cable, turn off the cell phone, sell the car, sell your jewelry, cut everything down to bread and water and leave the lights on in the water, and then we'll help you? How does it work? How much do you expect to take a financial haircut personally before you get the counseling help you need?
Well, I think counselors try to be realistic with people about their personal finances and give them choices. And obviously, people have to decide what's the most important thing for them financially. Is it keeping their house or is it keeping cable? And I think most of the time people choose their house and they're able to work on their expenses to address some of, if they have excess spending. That having been said, I think a lot of times there's opportunities to work with their mortgage company to sort of right size the mortgage loan and their mortgage payment to fit what their income, as long as they've got a job and they're making money. For the lender, it's often much better to keep people in a house making, maybe a 3/4 or most of the payment, rather than going through the cost of foreclosure.